Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager for GDM. With today's outlook, a lot of things happened yesterday. One of the most important, the S&P surprised markets at its policy meeting yesterday by abandoning its 3-year-old cap of 1.2 per euro on the franc. Now, policymakers also reduced the interest rates on sight deposits, deepening a cut announced less than a month ago. The US dollar traded 0.6% from an 11-year high against the euro after the Swiss National Bank roiled financial markets by unexpectedly scrapping the franc's cap. Surprising, of course, demand for safer investments. The single currency, the euro, headed for its biggest weekly loss versus the yen since April 2012 on speculations the European Central Bank will announce bond buying on January 22. A little more about the franc. It fell about 4% today versus the dollar, and euro suffering as much as 38% and 41% against the currencies yesterday, respectively. A gauge of the foreign exchange volatility climbed to the highest more than a year. Now, a little more details. In Japan, over-the-counter trading of currency pairs totaled 576 trillion yen, that's approximately 4.9 billion US dollars in November, with euro-franc trading accounting for 380 billion yen and franc-yen pairing making up 343 billion yen, according to the data compiled by the Financial Futures Association of Japan. By contrast, the dollar-yen made up the most with 463 trillion yen, followed by euro-yen of 28 trillion yen and pound-yen for 26 trillion yen. That's what the data showed. Investors also saying that they haven't seen such a huge demand for the Swiss franc in more than 25 years of foreign exchange market. Now let's take a brief look at the commodity sector before we eye the economic calendar with today's events, as they're extremely important with high volatility expectations. Gold traded near a 4-month high, set for a second weekly gain on haven demand after Switzerland's unexpected currency move. Against assets in the largest exchange-traded product expanded the most since 2011. Now, the price was at 12.5929 an ounce this morning from 12.6275 a day earlier, when prices jumped 2.8% for the biggest increase this year. Gold's rally sent the metal's 14-day relative strength index towards the level of 70, signaling that price may reverse. Now, the gauge was at 67.96 on January 16 from 68.52 a day earlier. Oil, on the other hand, headed for the longest run of weekly declines since March 1986, as OPEC forecasts weaker demand for its crude. Futures swung between gains and losses this morning and are set for an 8-weekly drop. Demand for oil from the Organization of Petroleum Exporting Countries will average 28.8 million barrels a day. This is the lowest since 12 years ago. Now, the group said in a report on January 15, Venezuela, one of the OPEC's 12 members, is seeking to coordinate a plan to calm prices. And right now, for the importance of today's calendar, Consumer Price Index Day at 10 GMT for Europe and at 13:30 for US. Industrial production at the same time for US as well. That's all for me for today. Stay tuned on Important Friday. Thank you. Bye-bye.